All right, so from the metaverse to the real world now, my next guest is a qualified real estate buyer's agent and property investor and has the experience and know-how to find that diamond of a property that many of us are looking for. Joe Tucker joins us now to talk about the current RBA interest rate rise and what it means. Welcome to the program.
Hey, thanks for having me.
Thanks for joining us. So obviously the RBA has raised the interest rate for the first time in 12 years. What does this mean for the everyday person looking at the property market? Is now the time to freak out?
Definitely not. The RBA has raised their rates for the first time in almost 12 years, taking the cash rate from 0.1% to 0.35%. And what does that actually mean for everyday investors and everyday owner-occupiers? It's not to freak out. This was bound to happen. We've been having emergency rates at 0.1% for a while now. We've got unemployment 4% and forecast to go even lower. And to think back, I guess, in April 2019, just 3 years ago, we were at 1.5% interest rates. So these rates rising is actually a good thing for the economy. We're starting to see the RBA raise the rates to bring down the inflation. And because unemployment is so low and there's evidence of increasing wages for everybody, the economy is in a better position.
Okay, so do you have any tips for anyone nervous about the interest rate rise? And you did say don't freak out, but perhaps people who need to understand it further.
Yeah, well, I guess the biggest thing is the clarity around what does this actually mean for you and your bottom line. So for Australia, the average mortgage is a little bit over $500,000. So with the latest rise, what this means, it's an extra $57 per month jump. So it's just not to freak out. It is only $57, but if $57 is a lot, then you just need to start to consider some buffers in place and look forward to setting those in place for you.
It's all about fortifying what you're doing day to day. So while we don't have that crystal ball, let's do a little bit of future gazing. How likely is it that we'll see another price increase based on your understanding of the market?
Based on my understanding and based off what the governor, Phil Lowe, has mentioned for rates, there may be an increase as unemployment and inflation, unemployment is low and inflation is starting to go high. So there may be a new increase coming towards the tail end of the year, maybe even next month. And this is the thing, not to scare people and not to get too overly excited about it, is just to set up your buffers in place. Speak with your mortgage broker, speak with your bank. It's not the time to freak out. It's the time to say, hey, what does $57 mean? What does $100 mean? And how can I forecast and factor those in at a later date?
Absolutely. Sit down and understand what's going on. So what does this mean for property investors or perhaps homeowners as well?
Yeah, for property investors are going to be quite fine with this. Over the last 2 years, if you bought a property, your property rents have probably raised 30%. For owner-occupiers, it's going to mean a little bit more. So again, just set those buffers in place and make sure that you can afford the debt that you have on. So maybe don't go and get that new car. No, maybe don't get that new credit card. Speak to the mortgage broker and say, hey, how can I fix my rates? Maybe you want to fix the rates. Maybe instead of paying down your debt on the loan, why don't you put that money into an offset? So when there is a rainy day, you have that fund there as well. So you can set that aside rather than paying down the debt, put it into the offset. So when that rainy day comes, you've got it there.
It's all about your buckets. I suppose a new PlayStation's out of the question as well. Joe, thank you so much for joining us on the program and unpacking a little bit more about what this means property-wise and what we can expect to see. We'll have to touch base down the track to find out how it's all unfolding after the election and everything else.
Absolutely. Thanks for having me. See you later.
Great stuff from Joe there. Some